Hello, everybody, and good morning. Current times call us to collaborate. It is more important than ever for the public and the private sector to collaborate and embrace this. This is why EY, together with the Foreign Investment Promotion Agency, with the support of the Ministry of Finance of Chile, have come together to help you understand the key aspects of the tax reform in force as of this year. This reform brings important changes to all foreign investors, as it includes new rules that can impact the tax-effective tax rate and investment strategies. Chile continues to be an example of stability and solidity to invest. Along with the serious work that has been done to control the pandemic in the middle of winter with other respiratory diseases, there has also been measures that look to protect employment, increase investment, and attract foreign investors as yourselves. The World Bank's contraction estimation foresees that Chile's GDP will drop by 4.3% for year 2020. This is less than the estimated contraction for the global economy, which is 5.2. In the region, we have other estimations. So for Peru, the GDP is estimated to drop by 12%, for Brazil, 8%, for Mexico, 7.5%, Argentina, 7.2%, and Colombia, 4.9%. As stated by the World Economic Forum a few days ago, we are living in a context of great reset. This, of course, will bring unknown and new challenges, and is already forcing us to question ourselves, to challenge ourselves as how we can do things better. Rethinking our tax systems in a more than ever global economy with many countries struggling to survive the impact of the pandemic will be a recurring topic. EY tax professionals, along with the team from the Ministry of Finance, have come together in an effort to deliver a better understanding of our current tax landscape. During this webcast, we will be in position to hear from the team that articulated the tax reform, what were the main objectives and principles that built this tax reform. We will then have some EY tax professionals give us highlights of what are the key changes important for foreign investors to have in the radar, because they can call for short-term analysis and actions. So now let's look at our agenda. As stated before, we will have some presentations from the Ministry of Finance team, also from the EY tax professionals. We will have some space for Q&A, and we will then have some key tax considerations for U.S. investors provided by Mariela Gonzalez, which is our U.S. desk. But before we dip into our agenda, some words from Juan Araya, Director of Invest Chile. Juan, a pleasure to have you here with us.
Thank you, Javiera. On behalf of Invest Chile, I want to thank EY and the Ministry of Finance for this partnership that allows to share with you some insights about our country, its investment environment, and of course, the situation that we are facing today with this pandemic. As many of you should know, Invest Chile is the government's foreign investment promotion agency, tasked with proactively attracting more and better foreign investment into Chile. Each year, we advise more than 700 companies. In our portfolio of assisted projects reach a potential investment of over $18 billion and keeps growing. As a government, we are extremely interested in the continuous development of foreign investment projects in our country. We are convinced that FDI will play a key role in our economy in the post-COVID-19 context. For this reason, we are supporting international companies every day so they are in a position to resume their investment or implement new projects in the country once health emergency passes. Since the beginning of the pandemic in Chile, we are operating at 100% of our capacity to help our clients. Currently, the agency is reinforcing its online contact with clients, providing overseas companies with the tools they need to be informed about government policies and assistance in the context of the crisis. Invest Chile has already held a series of successful webinars to answer companies' questions about the government's emergency economic plan and changes in the labor law. We will continue to hold webinars throughout this year, complemented by permanent online attention. The agency has also set up a direct telephone line for companies already installed in Chile in the context of our Doing Business from Home campaign, and we are reinforcing our communication through newsletters, reports, and ebooks targeting decision makers in overseas companies. We also plan to carry out virtual missions in key countries during this year. Also, we have a special report on the measures that our government has implemented against the effects of the pandemic that we can share with you. Note that we are facing challenging times for FDI attraction. According to the United Nations World Investment Report 2020, released yesterday, global foreign direct investment flows are forecast to decrease by up to 40% this year. This would bring FDI below $1 trillion for the first time since 2005. In addition, FDI is projected to decrease by a further 5% to 10% in 2021 and to initiate a recovery in 2022. Taking into account this difficult time for the Chilean economy, it is good news that our inflow of foreign investment has maintained its dynamism. In the first 4 months of this year, Chile received more than 7 billion in foreign direct investment, and this represents an increase of 35% of the same period in 2019. So far, it reflects the resilience of the activity of overseas companies in our country, but at Invest Chile, we have to continue working so that project continue to be developed, focusing on job creation and bearing in mind that the forecast indicates we will face difficult months as regards attracting investment. As I said, overseas companies will be an important pillar of our economy recovery once the pandemic has been overcome. I invite you to work with us to discover that Chile is a great opportunity for your company. And if you are already operating in Chile, let's talk about how we can assist you in our future projects in our country. Thank you very much.
Thank you, Juan, for your words. We will now start the presentations. I welcome Manuel Alcalde, Head of Tax Policy, and also Tomás Kovacic, Advisor for Tax Policy, both from the Ministry of Finance. Thank you, Manuel and Tomás, for being here with us today.
Thank you, Javiera, and thank you, EY and Invest Chile for this invitation, and greetings to all of the EY community. In terms of this tax reform, I want to give you a brief introduction in terms of what was the rationale behind this reform. And I must start saying that this reform was designed in an international context where we have been seeing initiatives trying to both strengthen anti-abuse rules, and a good example of that is all the BEPS project that has been developed the Oecd. But at the same time, we have seen the international context starting to look on how to increase and promote tax certainty rules. And in this, and related with tax certainty, we believe it is a key element in order to provide greater certainty for investment decisions. And with no doubt, we believe it have a significant impact on the economic growth. in this regard, a proper balance between both types of rules, anti-abuse rules and tax certainty rules, we believe it is key in order to have a properly designed tax system. And that is a key goal that this reform is trying to achieve. Another key element, and we have a clear diagnosis that most of our rules or several of our rules and our systems worldwide were a little bit stuck in the past, and it was necessary to bring them into the 21st first century, is that we also promoted in this tax reform what we have called a digital transformation. In this regard, we believe it is key to incorporate the use of new technologies, analytical tools, data sources to enhance compliance, but as well to reduce burdens, create efficiency, and overall to improve services for taxpayers. So digitalization, it was key in this reform, and there are several rules that are trying to establish an alternative to have a remotely relationship and interaction between the tax authority and the taxpayers. And let me stop 1 minute over here, because it is precisely this digitalization of our Chilean tax system which has been key in order to timely execute our economic emergency plan to face the economic crisis and sanitary crisis that we're currently facing through several tax measures that, of course, included the deferral of taxes and early tax refunds. And all of this, we were able to execute it in a timely manner because we had an extremely digitalized system at the moment. That being said, I just want to point out certain relevant changes that are for foreign investors included in this reform, and I will only name a few of them. Of course, Tomás will provide and will go through into much more detail into one and each of these items, but I want to point out certain relevant changes that are in place in this reform for foreign investors. The first one is where this reform has amended and changes several tax basis rules. And one of the most relevant rules that was changed in this reform, it is the definition or the text for a deduction for an expense. And the reform has included in the Chilean definition of a tax expense several business rationale within that definition. And that it was key in this reform in order to provide more levels of substance to our legislation, and within that substance to include the business rationale behind business transactions. As well, the reform has included a new depreciation allowance rule, currently in force, that 50% of new investment on fixed assets will be immediately depreciated. And within the last couple of days, we have reached a broadly consensus with several political parties in order to extend this depreciation allowance transitory rules to have 100% depreciation rule for investment to be executed until 2022. So this will be an extremely powerful rule in order to promote investment in the coming years. As well, this reform has included a broadly small to medium enterprises regime, which have also several incentives in order to promote the growing of this type of entities. And again, in the last couple of days, we have agreed in order to reduce to half of the rate of the corporate income tax that will apply to small to medium enterprises. So until the year 2022, we will have a 12.5 corporate income tax rate being applicable for small to medium enterprises business. On another matter, this reform has included certain changes in the cornerstones of the taxation of foreign financing. The reform has included changes to our thin capitalization rules, has included changes to back-to-back transaction, and have included a legal definition of what it is understood as a foreign financial institution, which of course it is key to understand to which type of transaction our reduced interest withholding tax may apply. And these changes, again, are eagering to include a substance over form approach to our tax legislation on one hand, which is the case of the strengthening of back-to-back transactions, and on the other hand, it is trying to achieve a greater level of certainty, including a definition of what must be understood for tax purposes as a foreign financial institution, which is something that it hasn't been defined in the past. As well, the reform has faced some of the challenges of the digitalization of the economy, adopting a VAT solution on digital services through a new and innovative simplified system. And this is key in the approach that we have adopted on how we're using technology in order to implement a tax solution that is less invasive, or it is business friendly with this type of transaction, as Thomas will explain in much more detail. And finally, this reform as well has updated several relevant international concepts for international taxation, such as a new legal definition of permanent establishment, such as a new definition of tax residency, and thereon. So finally, and I just want to say a little bit on the worldwide difficult times that we're facing. We know that we are in the middle of an extraordinary sanitary and economic crisis, and we have no doubts that tax and fiscal policy will be key in order to overcome this crisis and to reactivate our economy. So we're working hard in order to have an intense and aggressive plan in order to face these challenges, in order to overcome this crisis. And of course, we are already starting to look forward to reactivate our economy once the worst of this crisis will be left in the past. So this is something key that we will see coming in the upcoming weeks from a fiscal and tax policy perspective in our case. So with no further delay, I will leave with you, Tomás, which will explain into much more detail one on each of these key changes coming from our tax reform. Thank you very much.
Thank you, Manuel. Well, I will go directly to the presentation to try to be on time with that. So I wanted to organize the presentation in relation to which are the guidelines that were followed for this tax reform, and in all these chapters I will refer to specific measures, some of them already commented by Manuel. Which are the chapters is to simplify the tax regulation, to promote tax certainty, to encourage investment, and to adapt to digital transformation. Those are the main goals behind the tax reform, as you will see in all the presentation. The specific measures follow this rationale. Please, the next slide. Please, next. Thank you. The first chapter is to simplify the tax regulation. And in this regard, I wanted to show you the chart in the next slide. And as it compares the tax compliance time between Chile and the OECD average, as you can see, we almost double tax compliance time in relation to OECD average. So that was something we work on. This chart is based on the doing business report made by the World Bank for year 2020. So we expect that in year 2022, when all the measures that are implemented in the tax reform, this index will become lower for Chile. Also, in the next chart, please, in the next slide, you can see how is Chile doing in comparison with Latin America, including Mexico. And there you can see that we are in the upper side of the table, but still we think that we are going to be able to move on and increase in that regard. So which is one of the main measures in relation to simplify the tax regulation. Next slide, please. It's the way in which the tax system was amended. The idea behind amending the tax system was using the previous structure of the tax system, but making it work in a more coherent way. And which is the result? The result is that small and medium enterprises will have a full imputation system, and larger enterprises will have a partial imputation system. What does this mean? In Chile, we have an imputation system in which the corporate tax paid at the level of the company may be offset and deducted off the personal income tax to be paid by shareholders. So in opposition to a classic system in which there is double taxation, we do not have double taxation in relation to the same profits. Some features of the SMEs regime is that they will have instantaneous depreciation, simplified accounting records, a reduced 25% rate, and also an option to elect for a transparency regime. Please the next slide. For larger enterprises, the system, the partial imputation system, works like is described in the figure. In few words, the corporate tax at the Chilean company level will be 27%, and then you will have to make a distinction in relation to the foreign investor residence country, and for determining the total tax burden. The total tax burden will be 35% if the foreign investor is resident of a treaty partner country, and it will increase in almost 10 points if the foreign investor is resident of a non-treaty partner country. So a really relevant matter is if the foreign investor is resident from a treaty partner country. In relation to that, an amendment in the tax reform was made to a transitory rule that allows for countries that have subscribed an agreement with Chile but is not enforced to also cap the total tax burden at 35%, and that is will be applicable in relation to the requirements set forth in the law for two countries, United Arab Emirates and the United States. Please, the next slide. Here, so, and in relation to the importance of tax treaties, you can see how is the Chilean approach to international taxation. Chile is the Latin American country with the widest network of double tax agreements, tied with Brazil with 33 tax agreements in force, and with 3 double tax agreements in the way of becoming tax treaties. And also in the chart, you can see some other tax agreements in other matters. So I believe that this is an important chart to be an important matter to reflect on if an investment decision is going to be made. The next chapter, and please the next slide, relates to tax certainty. The next slide, please. Which is the main rationale behind tax certainty is to improve the quality of the tax system by minimizing economic distortion. And as Manuel already mentioned to you, the idea is to work further in substance over form rules, and which specific measures relate to this. It's, as Manuel already told you, a new business approach for a tax deductible expense. We previous to the tax reform, the concept of a tax deductible expense have some limits or some interpretations that turn into be not really flexible. So changes are made in that regard, so that the concept of a tax deductible expense adapt to new business models and the new business reality. A second important measure in relation to improving the quality of the tax system, it's a limitation for the application of a reduced 4% withholding tax rate on interest payment to a non-final beneficiary foreign financial institution. What does this mean? The Chilean law contemplates a reduced 4% withholding tax applicable to payments of interest abroad to banks and foreign financial institutions, but If the bank or the foreign financial institution turns not to be the final beneficiary, it's only an intermediary of that income, well, the 4% reduced rate will not apply, so you have to see the final owner of the profits. Another important measure in relation to tax certainty and how financing is carried from abroad is that a legal definition of foreign financial institution is included in the law, which provides certainty on which cases the 4% reduced rate will apply. Also, in relation to the tax system and dividends payment, an assumption, it's made, a legal provision states that a tax residence certificate issued by the competent authority abroad will be valid for 1 year, so that will make more simple for determining which is the total cap and tax burden applicable to payments of dividends abroad and also to other types of incomes, especially those ones that are contemplated in tax treaties. And finally, another idea in relation to tax certainty, these are not the only ones, but the ones that we wanted to highlight, it's that a domestic legal definition of permanent establishment is contemplated as per the tax reform, and that is based on OECD standards, trying to update the term and also to use rules that are applicable in general in the international taxation field. The next slide, please. The third chapter relates to encouraging investment. The specific measures here that I wanted to highlight are four. First, the possibility of an instant depreciation of 50% of the acquisition value of fixed assets acquired for new projects in a period of 2 years. This is currently in force and it's applicable until year 2021. As Manuel mentioned, this is a really important rule in relation to corporate taxation and in relation to the tax base. As it has a really great impact, a shock in encouraging investment. This is one of the measures that is being analyzed to extend in those alternatives that are going to be implemented for encouraging the economic activity, given the crisis derived from the health concerns. A second measure is the refund of VAT that is paid in the acquisition of fixed assets. The time for receiving a refund is reduced from 8 months to 80 days. So, a company that invests in fixed assets will get a refund in a shorter period that will help on the financing side of an investment project. A third measure is incentives to invest in R&D through control entities abroad. So if the result of R&D activity generates income abroad, that will be excluded from CFC regulations. And finally, changes in relation to encouraging investment were made in the foreign tax credit system to promote Chile as a hub country for receiving investment and having a headquarters, for example, and investing from Chile in other countries. Which are the main aspects of these changes? On one side, unifying the foreign tax credit that can be offset in Chile. What does this mean? If a Chilean company invests abroad and the entity receiving the investment pays taxes abroad, those taxes can be deducted from income tax in Chile, and the limit for that is 35%. Previous to the tax reform, there were two different limits, 35% and a 32%. So that cap was unified at 35%, which is the same rate applicable when profits are distributed from Chile to abroad. So you can structure in a way that using Chile as a receiver of investment can be neutral from a tax perspective. A second change that is relevant for these purposes is clarifying which taxes paid abroad can be used and offset in Chile against the Chilean income tax, so that there is certainty in relation to which taxes in the country that receives investments, and also if the country that receives investment reinvests profits in another country, you will get that whole change with the possibility of using tax credit in Chile, which is also aligned with the objective of promoting Chile as a hub country. Next slide, please. The final chapter, it's digital transformation, and digital transformation divides also in three measures. The first one is the digital transformation of the IRS and its relationship with taxpayers. That those changes has been really important in relation to all the measures taken to prevent the expansion of the pandemic in Chile. So we're really pleased on that, and also to take decisions for implementing in a timely manner a lot of tax measures precisely to face the economic side of the crisis. A second measure in relation to digital transformation is to digitalize electronic invoice on B2C transactions, in transactions from a business to a consumer. In B2B transactions, tax documents are already digitalized, but this is the part of the chain that was missing, and the tax reform moves on that for digitalizing as much as possible of all procedures and documents. And finally, it's a really key aspect of the tax reform is adapting the tax system to the digitalization of the economy. And I will go a little more profound on the changes in relation to this. First, next slide, please. I want to point out which are the solutions that are being discussed in a global manner in relation to the challenge of taxing the digitalized economy. You have the direct tax side of the discussion and the indirect tax side of the discussion. From a direct tax perspective, the solutions are mainly two: digital permanent establishment, so changes the focus of a permanent establishment from a physical place, from a digital connection, which has been turned to be really hard. And another solution that some countries has been working on a unilateral way, it's a digital service tax. Both of these solutions have some problems in the interaction with tax treaties. So this is why there is an ongoing discussion on the OECD to reach an international consensus on how to tax digital economy on the direct side, the direct taxes side of the equation. In relation to indirect tax, the solution is mainly VAT, and the challenges there is how to collect the tax, especially on B2C transactions with consumers. And there are mainly two mechanisms: the financial intermediary solution, which is that the local payer, the company issuing the payment method, withhold the tax. And the second solution is a simplified mechanism in which the non-resident service provider registers and pays the tax, which is the OECD recommendation. And in that regard, what has been the OECD work in relation to the challenge of taxing digitalized economy? That work started since year 2013, formally with the BEPS project in what is called Action 1. Regarding direct taxes, as I mentioned, there is an ongoing discussion for reaching an international consensus how to tax digital economy. And on the indirect taxes side, the solution recommended by the OECD, it's the VAT solution with a simplified mechanism of tax collection. And this is the position taken by the tax reform. Next slide, please. The tax reform implements the VAT solution, which is a simplified registration and compliance regime for non-resident suppliers on transactions with Chilean consumers. There are some services in which the non-resident supplier must register in this registry, and there are another kind of services that it's not mandatory to be registered, but the non-resident supplier may request to the Chilean IRS to be registered. And also, the scope of the registry is broad because, and this is a really interesting feature, sellers may request to be subject to the registry for collecting and remitting in advance the VAT on the import of goods. This is actually an ongoing mechanism in discussion on the OECD, and so that is why the tax reform included that solution as a non-mandatory alternative for sellers. On the cross-border B2B trade side of the equation, the collection system will continue to be the reverse charge mechanism. What does this mean? Is that the business, the VAT registered business in Chile is the one that collects the VAT in the transaction and must pay it to Treasury. Next slide, please. Which are the taxable events? And the importance of this is that non-resident providers that provide this kind of services are the ones that must register. Is the intermediation of services or sales, the supply or delivery of entertainment content such as videos, music, games, text, etc. The supply of software platforms or IT infrastructure, and advertising. So if a non-resident provides these services, must register in the simplified registration and comply with collecting the VAT. An important rule in relation to the implementation of the VAT solution in the tax reform is the place of taxation rule. And the rationale behind that was to reinforce the destination principle. This is where the business use is being carried out or where it is the consumption being made, which is the proxy for place of destination, place of taxation or destination principle in Chile is where the services are performed or used. So if services are performed or used in Chile, VAT will be levied and must be collected by the foreign services provider. And in this regard, some assumptions or presumptions were set forth in the law for purposes of facilitating for foreign services provider when a local consumer is resident and is using the services in Chile. So, for example, if the ID establishes that ID number establishes that the consumer is in Chile, and also if the payment method is issued in Chile, if you comply with these two assumptions, then it is understood that the services is used in Chile and VAT must be charged on that transaction. Next slide, please. Which are the main features of the system? Well, the registration does not require an agent or presence in Chile, so no permanent establishment will be constituted as per the registration. The VAT rate is 19%. No VAT tax credit will be allowed for the non-resident provider. This is in line with OECD guidelines for simplifying the compliance, the simplified compliance of the registry. There are flexible taxable periods. The taxable period can be of 1 month or 3 months at the election of the non-resident service provider. The payment can be made electronically in local or foreign currency. And also, from an operative perspective, the IRS has an online portal for the registration, and simplified electronic tax return will be implemented for payment. The first payment of VAT is expected for October of this year, as the way the secondary legislation interpreted the taxing period for this first time that will be the law in force. Next slide, please. This is to finish the presentation. There are some special control rules. The IRS will use technological tools to verify compliance. Also, the IRS may request information to non-resident taxpayers subject to the simplified regime on the identity of the underlying provider of services or payment made to those underlying providers of services. So in intermediation, it is expected to request information if available. And this is also a matter that is under discussion at the OECD. And finally, if there is a non-compliant, non-resident that does not register in the registry, the IRS is entitled to appoint the issuers of the payment method as a withholding agent. In this regard, the secondary legislation contemplates that there will be a list of registered non-resident service providers and also a list of non-compliant services providers, because one really important way of reviewing tax compliance is that there is transparency on the information and players on the field can know which foreign provider is registered and which is not compliant with that obligation. So I hope that these ideas are useful for understanding the rationales behind the tax reform. There are a lot of other measures, but probably this can guide you in understanding what is the objectives and the positions that were taken for the implementation of these new rules. With that, Javier, I give the floor back to you.
Well, thank you very much, Tomás and Manuel. I think it was a privilege to hear from you what were the main drivers and objectives that this tax reform pursued. So it was a great presentation. Thank you so much. Now we will have the pleasure to hear Juan Pablo Navarrete, an EY tax partner, who will give us some highlights on what we believe are the key changes that all foreign investors need to have in the radar. So with that said, Juan Pablo, the floor is yours.
Thanks, Javiera. Thanks, Invest Chile. And thanks, Manuel and Tomás, for joining us today. It was a privilege to have you and hear from you all the rationale and the tax policy behind this reform. As you saw from the presentation made by Manuel and Tomás, this was a large tax reform. It was actually discussed about a year and a half by the Chilean Congress. However, from the perspective of foreign investors, we believe that there are 6 topics particularly interest which are the ones that you see now at the center of the slide. Actually, it would be a 7th one already mentioned by Manuel and Tomás, which is that even though the government at the end did not succeed in the 100% integration between the corporate tax and the withholding tax without making any distinction between tax treaty country and non-tax treaty country, at least it would possible to extend the benefit for the tax treaty signed but not enforced. In this case, in the US, of course, which is a big benefit because until year 2026, even though that tax treaty is not enforced, would allow to use the 100% corporate tax as a credit because of the tax reform. Okay, so in relation to these 6 topics, Manuel and Tomás already provides a general explanation and the tax policy behind, especially in relation to the digital tax. So I would like to make some additional consideration in only 3 of them. The changes in the reduced withholding tax on foreign financing, which will be the topic that I will analyze with more detail. Then the gradual abrogation of the Chilean Tax Consolidation, also known as PPUA. And third, the expansion on the deductible expenses. Just let you know that Mariela, at the end of this presentation, will cover the interim 30% withholding tax on dividend. So basically, we believe that we're going to cover the main topics here for foreign investor. Can we pass to the next slide, please? Okay, debt financing has been by far the most common inbound tax strategy in Chile over the last 30 years. And the reason for that are pretty obvious. Basically, interest payment can be subject to reduced withholding tax rate up to 4%, even if there is no double tax treaty involved. On the contrary, dividend payments are always subject to a 35% withholding tax, even if there is a double tax treaty in force, because basically Chile made a in reservation in all Article 10 of the tax treaty signed, so reduced rate are not applicable. So that's the first reason why debt financing is preferred. And second, because interest payments are generally deductible from the tax basis at the level of the corporate tax. And the third reason is that capital reduction can be made tax-free in Chile only if Chilean company has no retained profits. And on the contrary, the repayment of the principal of the loan is tax-free, and the interest could be paid without any imputation rule. The only downside of financing is stamp tax that currently is not being applicable among the government measures as a consequence of the COVID pandemic. However, the permanent rate used to be always lower than 1%. And actually, from October onwards, the loan principal again will be subject to stamp tax, but capped at the rate of 0.8. So that's the reason mainly why this structure has been the more used for foreign investors in Chile. Okay, what happened with the 2020 tax reform? Basically, as it was said before, the 4% reduced withholding tax was excluded in the case of back-to-back arrangement. However, in order to understand what we should expect from the existing investment in Chile, financed with debt, and the new ones that are going to be made from now onwards, I believe that it's useful to describe in a very short way this timeline that you are seeing in the slide to understand where we are now after the 2020 Chilean tax reform. Okay, in 1987, the reduced 4% withholding tax applicable to interest payment was enacted without any kind of think-up rules. So during that period between 87 and 2001, the big question is, okay, what happened if a foreign bank is the formal lender? However, that foreign bank received a collateral deposit from the foreign parent of the Chilean sub. And the answer to the tax advisor at that time was, I don't know, actually. We didn't have guard rules at that time, but that's basically the situation. But then in 2001, think-up rules are enacted. And the think-up rule addressed specifically which would be the treatment of back-to-back loans. And basically the solution was that if there is a back-to-back arrangement, the loan granted by the foreign bank, that of course is not related with the Chilean borrower company, should be considered a related party loan for purpose of the think-up rules, and therefore think-up limit would apply. So after 2001, the back-to-back was not a loophole anymore because it was specifically addressed in the Chilean income tax. So at the end was a kind of safe harbor in terms of that back-to-back were allowed by the Chilean tax legislation, okay? Then what happened? And in 2014, new think-up rules are enacted that were stricter than the other one in relation to the debt that should be considered in terms of how to calculate the ratio. But in terms of back-to-back, nothing changed. So at least at the level of the law, the safe harbor continued. Okay, and what happened in 2016 without any change in the law? The IRS start to challenge related party debt from abroad. Basically, there is a famous paper published in a tax magazine by two high-level IRS officers and that support that position. Even though GAR rules had been enacted the year before in 2015, GAR could not be applicable to a case like this to challenge back-to-back because the think-up rules were in fact a specific anti-avoidance rule set, and that precludes the application of GAR. But it didn't matter. It didn't matter because basically the IRS started to apply a 40% penalty tax and over the expenses and pay on back-to-back loans. So that's what really happened in practice. without arguing any guard provision. And with this penalty tax that is very easy to the IRS to apply first, because one difference with guard is that for applying the penalty tax over re-expenses, the IRS don't need to go to any court to prove anything, which is the standard of guard. And second, because it's a penalty tax that you could apply even if the Chilean company is in an NOL position. So, so that's the way that this was solved from a practical perspective. So, and finally, what we have there in the reform of this year, 20 and 20, is that the law basically grants the same solution that the IRS had adopted in audits, saying that back-to-back arrangement and could not qualify for the reduced 4% and withholding tax. So, so that was the solution that now is on the law. And instead of mentioning back-to-back loan, the exact phrase of the law are structured arrangement, which is a phrase that is not unknown for us because it's mentioned in several tax treaties signed by Chile. And even though the proposed Treasury regulation are still pending on this matter, the law says that this kind of arrangement would exist if the lender that received the interest from Chile and is the one that qualifies for the reduced 4% withholding tax, afterward is obligated because a contractual obligation to transfer the interest to someone else. Okay, so what is typically in the guide of back-to-back structure, but we could imagine that not only would be applicable to collateral deposit, but also to, I don't know, a derivative that could be indexed to the loan, the same way that an issuance of financial instruments. So at the end, our conclusion, but I repeat that we're still waiting the proposed Treasury regulation on this, is that FFI, for example, if a group has an internal financial institution, that financial institution would be allowed to benefit for the reduced 4% withholding tax on interest. And the only transfer of interest that would be allowed at the end would be the ones that are made because of an ownership relation instead of a contractual one. So of course, if an FFI receives interest and these interests are considered as gross income, and then the FFI send dividends up to the ownership chart, that of course would be allowed because would not be a contractual arrangement. That's our interpretation. So let's see what is going to be said in the proposed Chilean Treasury regulation, but at least my opinion is that 4% would be available in the case of the FFI, and that's the good news. But back-to-back loans and not anymore, as already was pointed out by Tomas and Manuel. Finally, just to say that there is a transitory rule or grandfathering rule regarding to this, that basically they are saying that the limitation of the 4% withholding tax only be applicable from loan granted from this year onwards, which means that in case of back-to-back loan that already exists, the Chilean tax law will respect the 4% and granted before, and therefore there would be benefit for this grandfather treatment, basically. Then we could move to the next slide, please. Okay, this is another huge change in relation to what we call Chilean tax consolidation. From year 2017 onwards, the traditional carryback mechanism was not available anymore. However, a sort of carryback subsisted when a Chilean holding company in an NOL position received dividends from a Chilean subsidiary. In that situation, the Chilean holding could ask a refund for the corporate tax paid by the Chilean subsidiary, and this benefit was known as PPUA, okay? Okay, the 2020 reform abrogated this benefit progressively. The fade-out calendar stated that this year only the 90% of the losses can be used for this refund mechanism. In 2021, the 80%, in 2022, the 70%, and in 2023, the 50%, and from year 2024, it will not be possible any longer. So, and in considering with this, please note that any percentage of the tax losses that cannot be used in this sort of carryback can be used under the carry forward mechanism, of course. However, and unfortunately, carry back in these specific mechanisms of PPUA would not be available any longer. And then we could move to the last slide from my side. Thank you. No, one before that. This one. Okay. As it was pointed out by Tomás and Manuel in the beginning, the changes at the level of tax expenditures were very large and positive, I would say. Before the tax reform, the Chilean law states that expenses necessary to generate taxable income could be deducted from the corporate tax base. The phrase necessary to generate taxable income seems to be reasonable. However, what it was not reasonable was the interpretation of the Chilean IRS about that requirement. And on this, I would say that Manuel and Tomás would agree with me, because this was pointed out in the message of the tax reform bill that was submitted by the government to the Congress in August of 2018. So that was one of the sources why behind a tax policy, the government proposed this change. Just to mention some example, under the old regulation, the payments of any settlement at courts made by a company, or any payment by a company to its customer, and even the payments made by a company to its lawyer to contest a lawsuit and file against that company at court, used to be or could be considered as a re-expense by the Chilean IRS. And the both was very, the penalty in case of a re-expense expense is not the non-deductibility, but a penalty tax of 40% over the re-expense expense, regardless, as we've seen before, if the company is an NOL position. Because of this, many U.S. clients had actually in the past asked if this could be considered actually an income tax for purpose of the foreign tax credit rule here in the state. Fortunately, in all the cases that I'm aware of, it has been possible to argue that this is an income tax, and a strange one, but an income tax at the end of the day. So that's the reason why all the changes at the level of the tax expenditure were very positive, and I would say that is one of the main goals of the government in the beginning that could be achieved in the final outcome of the tax reform. And on this topic, the tax reform made a significant improvement because it changed the general requirement of the deductible expense, and also regulate in a better way specific items of expenses that should be deductible at the level of the corporate tax basis. And the proposed treasury regulation issued last Friday confirms the change of the old paradigm, though there were another goals that the government had, and unfortunately was not possible because they didn't have the majority at Congress. The changes on expenses and the tax deductibility was a significant goal that I believe that is one of the best achievement of the government on this tax reform, and I would like to finish with that, Javiera.
Thank you, Juan Pablo. Very interesting. I totally agree with you that one of the great achievements of the tax reform was our new tax deduction rule. So this is great. I think we're going to have now some minutes to go through some questions that have come through. I have some questions here for the Ministry of Finance team, Tomás. So what is Chile's position in relation to the discussion of the OECD on the application of direct taxes to digital economy?
Thank you. Thank you for the question. It's a really interesting one. Well, the current discussion, as I mentioned in the presentation, is divided as and called Pillar 1 and Pillar 2. Pillar 1 is precisely aiming for a consensus on the direct taxation of digitalized economy. Chile is with an active participation in the discussion of what will be the final result. We have an embassy designated for that, and we have a tax delegate dedicated to present Chile's position in the ongoing discussion. An interesting fact is that the meeting, a really important meeting in that regard, was going to be held in July this year, but given the health concerns all around the world, that was postponed until October. So we have great expectations of the results of that meeting and hopefully achieving an international consensus on the way to work on the taxation of digital servers from a direct tax perspective.
Thank you, Tomas, for that answer. So I have another question here, and it's for Manuel. So, Manuel, do you have any further information on the status of the Chile and US tax agreement? What are your expectations on this topic?
Thank you, Javiera, and thank you, Juan Pablo, for a great presentation. Well, we have great expectations on that treaty. Our policy on tax treaty has been to have an open policy. We are looking forward to enter into a new tax treaties. We believe in a world that it is connected, and it's key for us in our international tax policy to enter in this treaty in order to avoid double taxation and have them in place. And the treaty that we signed with the US in 2010, it is of course a key treaty to us. Last year, as you saw, the US Congress, after a very long time, approved some protocols, being the first treaties being approved by Congress. And we have a great expectation that we will be able to move forward our treaty. We've been in contact with the Treasury in order to get this approval in the US. So we see that we have an opportunity in the upcoming time, and of course we're eager in order to have that treaty in place. And as Juan Pablo and Tomas were mentioning, in the meantime, what we have done from a domestic perspective is to extend some of the effects of having a treaty in place in order to have a fully integration or dividend imputation system for US investors, and that is something that we have done from the domestic perspective. But of course, it is key to us to have this confirmation from US Congress, and we will keep pushing on that.
Thank you. Great news. So I have now two questions that have come through for Juan Pablo Navarrete. Juan Pablo, in relation to the existing loans granted by the foreign financial institutions that do not fulfill the new requirements established by the 2020 tax reform, would these loans be covered by the grandfathering rule or not?
This is a huge question, actually, Javiera, and we will have to wait until the proposed Treasury regulation on this matter to have a clue. Just to put everyone on the same page, why is this problematic is because the old requirements for FFI to qualify for the 4% withholding tax were not in the law, but in an IRS resolution of 2008. And now the tax reform include the new requirements in the law. So, and the grandfathering rules refers to the changes of the law. So say that the changes incorporated in the law will not be applicable to loans granted before 2020. So I would say that the IRS has two options here. The first one would be interpret the word changes in a broad way, and in consequence, grant the grandfathering protection to the loans granted before 2020. And even though if the foreign financial institutions do not comply with the new requirement, that would be one position. And the second position is that they interpret the word changes in a narrow way, saying that the old requirements for the FFI were not in the law, and therefore no protection can be claimed. Of course, we are hoping the first interpretation, but let's see what happens.
Thank you, Juan Pablo. So another question that came through, and I think is very important because of the temporary slot we have, right, is in regards to the progressive fading out of the tax consolidation system here in Chile, right, the one you described in your presentation. What would be your recommendation for companies, holding companies in Chile that are full of accumulated tax losses and that will have to face this progressive fading out of this tax consolidation benefit that we used to have?
Okay, the first thing that I would advise is to model the potential corporate tax refund with the fade out calendar contemplated in the tax reform, and compare it, bringing, of course, the net present value with the use of the tax losses under the carry forward mechanism, and compare that in a model exercise. And it could be that the outcome of this model exercise indicates that a company should try to recover the corporate tax paid in the past during the next 4 years, as it is contemplated by the Chilean tax law. Even though when a taxpayer asks for a tax refund or rebate, usually that triggers an audit. At the end, this is a tool that is in the law. So for a specific reason, this fade out calendar was established instead of eliminating the benefit at once. So that would be my first advice. Model and see which would be the benefit comparing with a normal carry forward mechanism. Then the second advice would be to try to bring the tax loss to the company that generate taxable income in order to use in a better way the carry forward benefit. This could be achieved by a merger between the holding company and the Chilean operative company entity, being the Chilean holding the surviving entity. Unfortunately, this is not always feasible to do, or eventually start a new business in the Chilean holding that has the tax losses. And on this regard, it would be important to know that at the level of the carry forward mechanisms, there is no expiration time in Chile in relation to the losses. The IRS response to that is that there is no statute of limitation period for them to review such losses. Okay, that's the trade-off. However, but there is no limitation. And also, it should be pointed out that the restriction in the use of tax losses are only triggered in the case of a change of the ownership control plus other circumstances. So therefore, the carry forward mechanism is a good option in Chile, even though we regret the abrogation of the PPUA mechanism. And to be fair on this, just say that this change was not part of the government agenda, but it was necessary at the end to include it in the discussion at Congress to get the approval of the whole tax reform bill.
Yes. Thanks, Juan Pablo. I think to your point of modeling out the effects and taking some key decisions is really important and critical for foreign investors that have holding companies here in Chile or have huge business groups, right? So we have to face this with good analysis and actions. So we will now give the floor to Mariela Gonzalez. She is a manager, a tax manager within EY Chile, who is currently in the role of our desk in the US. So she is very close to the US investors and hearing what is important for them And so Mariela will give us her comments on the tax reform from a U.S. investor perspective. Mariela, thank you.
Thank you, Javiera. So from US clients, we have been hearing a lot of questions about what changed about this single mandatory tax regime. If we can project the last slide, please. So in a nutshell, the corporate tax rate continues being 27%, and the overall withholding tax continues being 35% since the US are treated as a tax treaty jurisdiction. Now, if the direct shareholding in a Chilean entity is carried out by a tax-haven jurisdiction or by an entity domiciled in a country that does not have a double tax treaty with Chile, a 9% penalty tax will apply, and the overall taxation is increased to 44%. So I think one takeaway here would be that if any US holding does not directly own the Chilean subsidiaries through a tax treaty jurisdiction, or the US for this matter, it is definitely worthwhile considering a restructure to prevent this 4% penalty. Also, related to dividend withholding tax, there is an open window available until April 2022, consisting in applying a 30% overall dividend withholding instead of the general 35% that we were talking about. The main caveat here is that the company needs to have earnings generated before 2017. A similar interim regime has been available in the past. It was not widely used by US investors. So if you have subsidiaries planning on making a dividend distribution, review if this reduced rate applies to your case, and in case it does, use it, because it will be a reduction. On financing structures, I think that the most relevant takeaway would be to carefully design any new finance operation, considering the limitations established to opt for domestic reduced rates. And the third point, which was addressed by Tomás, it was that before June, it wasn't really possible to register for VAT purposes only in Chile. But now this is allowed for digital service providers rendering services to Chile. So if you have a company that renders this type of digital services, it's important to review if this tax applies, and in case it does, go to the Chilean website, register for the tax, which is something that can be done in a remote basis without a Chilean representative. Last but not least, there are some COVID-related initiatives, such as 100% depreciation in the same year of acquisition. And there has been some discussion about carryback losses, although this is something that is only at the level of discussion. So I would say stay tuned for further developments, and that will be all from my side. Back to you, Javiera.
Thank you, Mariela. I think that stay tuned is the phrase of the day. There are things happening all around the world. Chile is not an exception, of course, and measures are being taken, discussed, so it's really important to be alert. With that said, I would just like to thank the Ministry of Finance, Manuel, Tomás, Invest Chile, in the presence of Juan Pablo and Mariela for having participating today in this webcast. I hope we fulfilled the expectations of all those who tuned in today, and we will probably have new webcasts coming in the future. So thank you very much for joining.